Hello and welcome to another edition of Beyond the Blueprint podcast. I'm your host, Jeff O'Donnell, and joining me today is Robert August, founder and president of Northstar Synergies. Thanks for being with us today, Robert. How are you?
I'm delightful. It's a pleasure to be with you and your audience.
Thank you very much. Let's kick things off. Could you tell us a bit about your role at Northstar Synergies and how you got started in the real estate business?
Thank you. I got started at Northstar Synergies indirectly in 1983 when I founded my own companies. I founded an international consulting practice and a national real estate corporation. And I changed the name, both of which were S. Robert August and Company for the consulting practice and S. Robert August Realty Corp. I changed that in the real estate company in 1995 to Realty Works, and then I changed the consulting practice in 2011 to Northstar Synergies. So we've been open for 43 years. And in that process, we have worked with over 3,750 building companies, directly in Colorado, we've represented over 750 of those builders with direct land, home, office building, and apartment leasing campuses as well. So we've had a good run for many, many years, and it's a pleasure to be with you today.
Wow, that's very impressive, Robert. Thank you for sharing that. Now, looking at the broader industry, what are some of the biggest shifts or trends you're currently observing in the real estate market?
Well, there's no question that AI has made a wonderful difference for all of us as we've learned to work with the opportunity to gain more insight into local markets. Unlike a lot of your listeners, we work nationwide. We work coast to coast, border to border, from a consulting standpoint. And in addition to that, we also work internationally in 10 countries right now, and I've had an international flair and participation since we established the company in 1983. The companies in 1983. I did grow up in a large family business that was international in scope from the get-go in 1891, and upon recognizing that the corporation was not going to be a fit for me, I moved directly into real estate and have been working in this arena for decades. So we've seen a lot of changes, and we'll continue to see changes. Right now, we're anticipating that the interest rates for mortgages will hover around 6%. Last week, we came down to 5.99. There's a lot of uncertainty with banks. They're not interested in lending their money today as much as they were before this administration. Unfortunately, they're concerned about the differences of the administration and how it's developed its business practice. One day there's a positive direction, one day there's a negative direction, and as you know, in the lending arena, especially with bankers, they like consistency. They like to know what tomorrow is going to bring before they lend money for real estate development. And when you get involved with real estate development, it's not just lending for a particular home. You have to concern yourself with the entitlement process, which can take 2 to 3 years on average throughout the United States to get a parcel of land approved through a local jurisdiction. So with inconsistency and an unsure economic environment, a lot of the builders are turning now to investment bankers with the hope that they'll have development money, first acquisition, development, and construction funds available. Permanent financing is available and will continue to be available throughout the marketplace, regardless of where you are in the country. So, excuse me. So, in essence, we'll see the rates, as I indicated, for permanent mortgages hovering around the 6% area. The nation is anticipated, according to the National Association of Realtors Research Department and that of the National Association of Home Builders, we look for the market to be relatively flat this year. Maybe in a market it'll go up 1 or 2%, and maybe in another market it'll go down 1 or 2%. But for the most part, it's expected to be flat from year over year. The good news for those that are listening, we anticipate a major jump in remodeling. Because it's so costly to purchase a new home these days, many people are going to stay, as we say, hunkered in their existing home. And what will happen, Jeff, is that they'll use their liquidity from the equity that they've raised over the years by participating in an existing home and enjoying 2.75% mortgages, upwards of 4% mortgages. They'll be able to take their equity out of that home and then have a second that would be put on their home for roughly 6%, as we're talking about now. So that money that they'll be able to obtain with a second mortgage will be very advantageous because they'll have a blend, and by improving their home, the value in their home will also increase. So they'll be building equity with an improvement of their existing home by taking that money and enhancing the existing home, whether it be with better exterior materials, windows, doors, siding, roofing, etc. So as they enhance the value, and then if they choose to move inside the home and look at the two most expensive rooms, which are the primary bathroom retreat and the other bathrooms along with the kitchen, that will add more value to their homes. So we're looking forward to an increase in remodeling literally over the next 6 years. And it will continue to increase and increase because, again, it will be too costly for many people to move from their current home.
Right. Yeah, that's very insightful. Thank you. Now, you mentioned the interest rates. Like, how does that directly impact your business?
Our business, I mean, it's funny you should ask, Jeff. Our business, we do much better, surprisingly, in challenging markets than we do in normal markets. And you might ask why. So, Jeff,
wow.
Ask me why.
Yeah.
What happens is that...
why is that?
As the markets slow down, most people that are in this business, they use the same tactics and strategies that they used in good markets, and they don't always work. And so, unfortunately, there's a definition of insanity that we learned from Albert Einstein. When you keep doing the same things over and over and get the same results, it's crazy. So, in essence, sometimes you have to wait for people to find issues that they finally wake up and realize that what they're doing isn't working, and then we come in and help them make more money, often in a downturn or a challenging market, than in a regular market, because they're finally willing to listen, and to let us implement marketing and sales strategies, tactics, and tips in order to further grow their companies. And we've been through 9 downturns, and in every downturn, economic downturn, we've been able to help corporations grow above and beyond their normal expectations.
Wow, that's very interesting. That seems backwards, but that's how it works, I guess, eh?
Well, in our business, it does. Of course,
Right.
in the real estate industry and the real estate sales, we've been very, very fortunate. As I shared, we've exercised thousands and thousands of transactions over the years, and we're very, very knowledgeable about the real estate industry. Of course, when you go from market to market, Jeff, you have to learn the idiosyncrasies of each individual market. What you do in Denver, you can't do in Philadelphia. What you do in Philadelphia, you can't do necessarily in Raleigh, Durham. And so you have to learn each individual marketplace. And there are 300 plus key markets throughout the United States. So over the years, we've learned to enjoy the economic development of markets, and get to know communities through boards of realtors, through chambers of commerce, through economic development councils, and also home builders associations.
Wow. No, that's excellent. That's great to know. Thank you. So beyond that and the interest rates, what else is currently working really well for Northstar Synergies?
Well, from day one, we were an international corporation, and our business has grown since COVID, whereby we're working in 10 countries today. And they all have the builders, developers, manufacturers that we're currently working with. Their products are very, very good. And by diversifying on an international scale, it's helped us gain a perspective of what goes on in those markets from which we can also help them. And so much of what we do is train the marketing professionals and train the sales professionals and help build marketing plans and sales plans for these organizations and help monitor the programs and execute the programs. So we've been engaged from that perspective, and we'll continue doing that as a direct result of our capabilities.
Yeah, that's great. Thank you again. So beyond what's working really well, are there any areas that you're finding most frustrating or challenging right now?
The only thing that I find that's frustrating is that that I shared with you earlier. I find over and over most of the people that have come into the business since 2011, the market has been very, very good.
I didn't get that.
And
Could you try again?
excuse me, my phone went off. I'm sorry. So,
No, that's okay.
so in essence,
That's okay.
what's happened over the years is that in these challenging markets that we've interfaced, those that have come into the market since 2011 are a little shaky about the marketplace today. The issue is that it's just what we would call an economic blip. It's not cataclysmic. It's not going to be unless there are other ramifications through the federal government, and we are concerned about the international flare and these wars that the administration is projecting and doing without control of the or participation of Congress. And unilaterally, the markets are disturbing, and there will be a continued issue with regard to supply chain disruption, which we haven't seen in several years. But based on my experience, we look for supply chain disruption to occur. Since 1976, we have been a third world country with regard to manufacturing. We gave away the steel industry after World War II, and it took 30 years for the competitors to produce steel at much lower prices than we can deliver in the United States. So as a result, a lot of the manufacturing that we see nationwide for building materials, many of the parts come from international markets. And with the tariffs being imposed. They definitely impact the builders to pass along material to the local consumers, and as a direct result, we're all paying higher prices and inflationary prices for goods and services that come abroad. And what most people don't understand is that to build one individual home in the United States, it includes 300,000 parts. 300,000 parts, Jeff. And all of those parts are not made in the United States. They're assembled, they may be assembled in the United States,
Right.
but we depend so much on manufacturing plants in Asia, in Europe, and South America, primarily. It's impacting not my business. It's impacting all of the builders and developers throughout the United States. Over the next 4 to 6 months, they will see their material increase in price dramatically, because at the end of the day, the government may take in taxes, but they're inflationary, and the direct result is that the builders are going to pay more for the products and services that relate to these manufactured goods, and as a direct result, they're going to pass along these higher costs directly to the consumer. So, in essence, it will slow down the trajectory of real estate sales because although wages are going up at a pretty good rate, they can't keep up with inflation. So, as a direct corollary, you're going to see more concern and a slowness of real estate sales, both with existing buildings and new buildings. And you're also going to see those that are renting, as they renew their leases, the leases will be higher and not lower for the most part throughout the United States.
Oh, wow. That's interesting as well. Now I have a kind of a fun question here. If you had a magic wand and could fix just one thing in your business that's holding you back or slowing you down, what would that one thing be right now?
That I can physically fix?
Yes.
Yeah, there's nothing that I have for you. We've been through, as I shared, 9 downturns. We get it. Jeff, we're referred to as icons or legends in the industry. Not by myself, but by the largest trade association in the construction industry, the National Association of Home Builders. Our company has received countless awards. I've received many awards as a direct result of our creativity, and I'm the only sales and marketing professional, to my knowledge, that's ever been installed in the Housing Hall of Fame for the National Association of Home Builders, a trade association today of over 140,000 companies and well over 10 million employees. So, in essence,
wow.
And we're very fortunate. The other thing I might have shared with you throughout the years, we don't sell wants and needs. We sell experiences. And the real key is that we focus on training salespeople to sell needs, to stay away from the wants. The more that you sell the wants, the less you'll complete a sale with a consumer. You have to stay focused and provide consumers what they want, what they really, really need before you delve into the wants. So it's just an interesting conundrum that we figured out. And I was very, very fortunate to have a father and father-in-law who were chairman of the boards and president of their international companies, who could teach me about the art of selling an experience. And as a direct result, my children today both have their own companies. The older one has 3 corporations, and they've learned to sell experience. And as a direct result, the experiences that they're selling are rock solid, and they've done extremely well on a national and international basis. Again, it's experience. That's what people are looking for. They're looking for the excitement, the enthusiasm, and the ability to enjoy, in our industry, a comfortable environment, a new lifestyle environment that they can be proud of and enjoy for many years to come.
Absolutely, I completely agree with you there. That's definitely something to listen in on and figure out for everyone else, because that's key for sure. Now, looking ahead, where do you envision Northstar Synergies being in the next 6 to 12 months?
Well, the next 6 to 12 months, next 6 to 12 years, doing exactly what we're doing, helping businesses understand where they're at and get them centered, get them focused, and then teach them how to make more profits and more importantly, more cash flow. As you know from an accounting background, anybody can write profits any way they want to, but in our business, it's all about how much cash you can acquire and hold on to. That's the real science of the real estate industry.
Right. No, that's very good as well. Thank you. Now, is there anything else you would like to discuss before we finish up?
I would just tell everybody one of the key principles in our company that I learned growing up in our family business, surround yourself with the best possible providers of services. I'll make you smile, Jeff. I was taught to go out and find the best CPA firm. I was taught to go find the best attorneys, not worry about the price, of the service, because at the end of the day, when you hire the best keep you out of trouble. Number two, not only do they keep you out of trouble, they help you earn more cash flow and more profits. So whatever your business is, those of you who are listening, always surround yourself with the best service companies and the best trades and the best companies that you can possibly work with. It will pay dividends. Those people will look out for you. And the other thing I learned, as soon as I get a bill from these service companies, Jeff, I pay the bill immediately. I don't wait 30 days. I don't wait 45 days. I don't wait 60 days. And the reason is I want them to know that they're front of mind with regard to me. Whether it's a big invoice or a little invoice, every invoice gets paid immediately. And as a result, we get excellent service from the corporations that work with us. And when we're representing other builders and developers or manufacturers or vendors, we will not take on an opportunity to work with a company unless they have the same consideration that we have for making sure that everybody gets paid early and on time before the money is due, because you end up getting better services and you get people that are more interested in taking care of you and watching out for you.
Well, that's very sound advice. Thank you, Robert. I appreciate that.
You're welcome.
So, that's all we have for this episode of Beyond the Blueprint. I want to thank our guest, Robert August, for his insight and expertise. It's been a real pleasure. So where can our listeners find you or contact you if need be?
Thank you so much. They can find me at northstarsynergies.com. Phone number, my cell phone number that I spell SELL, is area code 303-601-5840. 303-601-5840. And my email address for everyone today is robert@northstarsynergies.com. Once again, robert@northstarsynergies.com. Looking forward to hearing from every listener today, tomorrow, and forever. Thank you, Jeff.
Perfect. Thank you again, Robert. I'm your host, Jeff Woodall, and we hope to catch you on the next one.
Excellent. Thank you.